All right. Good morning, everybody. This is Jeff Scott. It is Sunday, April 7th. I'm trying to do this earlier today, assuming we can get that to be a good habit. It's at approximately 9:30 a.m. And welcome to this weekend's top-down review using the HGSI tool. Hope everybody had a nice weekend, or is having a nice weekend, and had a safe holiday vacation, and hopefully had a safe week. It was a horrible week in the market for those that are HGSI-style investors, and frankly for most investor types. As you could see, the subtitle today is Oversold or More Selling to Come. And clearly this market has quickly become oversold, as I'll show you, but sometimes markets have a tendency to become even further oversold. But I do see some signs on my review that suggest that maybe we'll do a bounce perhaps earlier in the week. For those who've not been here before, my traditional disclaimer: educational purposes only, any recommendations in the spirit of education and not to be considered investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, and I am not affiliated with any software vendor or trading company. The tools I demonstrate are those that I use in my daily trading. I have paid for all the tools that I will be using tonight or today. I purposely hide my desktop because I've never met a software program I didn't buy. But in reality, I don't need all of them. I need a real-time charting program and trading platforms such as TradeStation or Thinkorswim. I need something to analyze the market, of which I like HGSI, I like EdgeRater, and I like seasonal analysis with Magenta Trader. And then I've learned a lot from some folks that call themselves Woodward and Brown Investing, Ian Woodward and Ron Brown. They have free blogs and weekend reviews, which I'll show you where to find them, and they have a paid newsletter and daily market update. I think one of the things that I learned from Ian, this guy here on the left, is that you shouldn't be relying on other gurus. You need to become your own guru. So each of us will have influences that drive what the decisions that they make, and many of my influencers are listed here, whether it's Alexander Elder, Van Tharp, Stephen Bigelow, Morales and Katcher, O'Neill, and then Woodward and Brown websites are here. You can stop the tape if you want to copy any of this down. These are all books that I've read, folks that I've listened to, live meetings, online meetings, etc., websites that have helped shape my investment style. Now, I make the mistake throughout this call saying buy list, buy list, buy list. This is a setup list. I am looking tonight or this morning to look at what the market is doing, to build a game plan of what to do if the market goes long or if the market drops tomorrow. If the market is going long, then I want to find stocks in the best sectors and the best stocks in the best sectors to go long with. If the market continues to fall, I'll be going defensive and potentially taking more shorts or puts or buying some contra ETFs, which I have a modest position in right now. If I say tonight or this morning you're in my buy list, all it means is that I like the setup, and then I'll be looking for triggers. As always, I'll go from the top down with my weekend review of the market, look at the market, industry rotation, and stocks, then use some shortcuts. This will be about an hour from here. It's showing 9:34, so my goal is to be done around 10:30. Woodward and Brown are my secret weapons, or the secret weapons of HGSI. And very quickly, let me just go to the website. Control. I don't know if that's going to work, so let me just minimize that. That's my view outside my home office here in lovely New York. And I want to go to the website. So www.highgrowthstock.com, 30-day free trial, no credit card required. And basically on the website, a couple of key points. The next seminar is October 26th through 28th. These are outstanding, great investments, $1,250 give or take. They feed you, they water you, and they educate you extraordinarily. Highly recommend that. If you do have the software, make sure you've gone to the Learning Center, to the add-ons, and that you have downloaded and installed these top 3 at the minimum updates 3/16/2013, or your software will not look like mine. If you're looking for Ian's blog, it's under blog here, and the last one was April 3rd, when he talked about the major shot across the bow and sort of gave us some parameters for whether or not there's a bounce or further drop. And then Ron did not do a weekend report this weekend, I believe. I guess he's recovering from the meeting, but under reports, Ron Brown, you can see his movies you can download, and also you can see a series of videos that I have done. So great program. It's what I use for most of the time tonight, and I have been involved in providing free to everybody. I do this for fun. I don't get paid by the program. I don't get paid by the users. A series of videos to help people get more out of the product. So enough of that. Let's shut that down. And let's start to look at the market. So those who've been here before know I have a routine. I like to go and see what happened last week. So I'm going to pull up my my GPA from Friday. So what I did is I took many lists that I follow. And I don't buy all these lists, but what these lists do is they give me a sense of what's working and what's not working. And I assume that I bought an equal dollar value of each of these lists, each of their stocks, at the close of the day on the 29th of March, and then I closed them out this Friday and looked at 1 week's return. So most of these lists are make-believe lists. I do have a list that's called current stock holdings. Those look at the stocks that I had on Friday a week ago. Now, my performance was horrible, but reality is most of those stocks were gone on Monday. So my portfolio at the end of the week doesn't necessarily look like the portfolio at the beginning of the week. So it really just gives me an idea of the types of stocks that I like, how bad of a week or good of a week they did. So the first thing you might notice here is that there is only 3 groups that were positive above the black line. Despite it being an overall ugly week, the S&P 500 was, although down, it was only down 0.5%. Now, to give you an idea of how bad of a week it was, HGS 100 was down 1.66%. The IBD 50 was down 3.21%. The stocks that I had 10 days ago performed about the same as the IBD 50, a little bit less bad. Now, what wasn't working, high relative strength stocks had a bad week. Stocks that had been leaders corrected. Only 4 out of 19 of the leaders went up for the week. The best of Woodward and Brown, the group that for the last many weeks has always outperformed going forward, had a horrendous week, down 3.58%. I mean, the 4 stocks that I had planned on selling, regardless at the open, ended up doing well, where they were down 5%. Leaders with rising estimates were down 5%. So growth stocks, leading stocks did poorly, and the things that did well were bottom fishing. Gap ups continued to do well. Pullbacks ready to run with, these are already stocks that have corrected. They did well. Green candle lows were below the S&P 500, as were red candle highs. So, tough week in the market if you were long growth stocks. Simple as that. I like to look at TradeStation to get a sense of what the market is giving me or not giving me for the week. And you know, we've been talking weekly about the divergence in the NASDAQ and the MACD, and it's certainly at this point come to roost. The NASDAQ sold off hard, so this is Friday, Thursday, Wednesday, Tuesday, Monday. It sold off, bounced a little bit on Tuesday, and then sold off the rest of the week. Closed near the high of the day on Friday. So if I look at this as a candlestick, one might expect to see, here you go. Here's the bar. Open down here, closed up here. So a tall candle, higher than open than the close, but still a down day. And being in red, Elder would tell us that you can hold or you can sell, but you shouldn't be buying. Now the weekly and the monthly on the NASDAQ are blue, which are less committed one way or the other. If you look at the Dow Industrials, take a look at this, if this will pop up for us. Maybe. Yeah, here it comes. I have so many things running that I always slow down my internet access, so it takes me a little while to update things like this. The Dow, less sick, as you can see, certainly performing better than the NASDAQ. It, too, reached new highs without getting above the midline on the MACD. Blue across the board, green on the monthly. So the Dow you can either hold or you really do whatever you want, because a blue on the daily could be buy, sell, or hold. And lastly, looking at the S&P 500, nothing's happening fast here, but let's see what this one shows. Green on the monthly, so still a powerful monthly move since 2010 with some nice pullbacks. On the weekly, blue, and then on the daily on the S&P 500, looks a lot like the NASDAQ in that it has gone red. So certainly blood in the marketplace, and a lot of signals that it's not time to be going long yet. Now, that can certainly change, and it's too early to really look at the futures, but you know, I can never resist that, so I'm just going to pull them up here. And yeah, I mean, I don't 5:15 p.m. These are basically not important at this point. Okay, what else do I want to do? I like radar screen in TradeStation. So what I do is I put a giant radar screen together, and then I look for footprints. So one of the big footprints that I saw was these are the buyable gap ups. And for it to be a buyable gap up, you have to have a gap of a minimum percent, and then so much times the average true range of the stock. And if I meet both of those, and if the stock is trading above the 200-day moving average, I believe, I'll get green. And you could see that although not all of them are above the moving average because they did in downtrends, you had a whole bunch of buyable gap ups occurring on the bears, on the 3X bears. So that would be something that would make me be a little bit concerned going in this week. If I look at the S&P 500, that's going to convert a whole lot of buyable gap ups. Let me go back up here. Got to move everything out of the way. I can just put that over there. No, I can't. So these are just the high volume stocks. Nothing really to mention there. Let's go down and see about the S&P 500. IBD 50 from last week, no viable gap ups. Let me just make sure I'm searching on the right thing here. Nope. Go down to the next break. Here's a top. These are some of my some of the stocks that I've put together to look at charts on. And if you look at these again, a lot of UNG, which we may talk about later. Xerotex, which is in the, they make some of the components for disk drives. They popped up here as well. So really, most of the viable gap ups that I see on my big list occurred in bearish types of products. Now, the other thing that happens when the market sold off hard and rebounds a lot, then you got a lot of stocks that have rebounded as well. And so if you go through, the 3X bulls had a bunch of green candle lows. My high volume stocks had a lot of green candle lows. And in a second, we'll see the S&P 500. Maybe I took the S&P 500. Here it is. And then the S&P 500, you can see a lot of green candle lows as well. So that could be signs that maybe, just maybe, we might see some kind of a bounce. And again, just looking at the S&P 500 here. On the S&P 500, no viable gap ups. All right, we close this down, and I'm actually, until I get my not enough internet signal, I'll leave that up and running. Okay, so market feels weak, not a big shocker. And lastly, I'd like to look at EdgeRater. And for those who've not been here before, this is one of my favorite charts to look at. What I'm basically doing is the software is doing for me, but I'm taking the Bollinger Bands. The upper and the lower, the midline is at 0.5, and I'm looking to see where the stocks fall. And if I take the S&P 1500 in a bull market, I'm going to be about 70 to 80% as the average, so above the midline, and most of the stocks will be bouncing between the upper band and the midline. In a bear market, I'll be at 20 or 30%, so I'll be down here as the average, and it'll be bouncing between the midline and the lower line. As markets get extended, I see stocks above or below the Bollinger Band. So EdgeRater actually automates this with HGSI, and it tells me that 64% of the stocks are trading below the mid-band and the Bollinger. That's a bearish reading. Now, I'm a little bit, as I talked about, is this market oversold? 12% of the stocks are below the lower band, and the lower and the upper band capture 95% of the movement of the stock. So if you only live above or below that for 5% of the time, then odds are you're not staying there a long time. So 12% in the low, 14% between 0 and 10, and then another 12% between 10 and 20. So in the last three, 80 to 100 and below, or 0 to 20 and below 0, make up over a third of the stock. So to me, I typically see bounces coming in soon at this point, although it can go much lower, much more oversold before that happens. Just to compare it to last week, we were sitting at 70%, and I believe last week I actually commented on the number of stocks at the high end of the Bollinger Bands, and that might be a signal that a correction was imminent. Other thing I like to use on this is to go into the O'Neill Disciples signals, and I'll change this to all securities. I'll hit run, and if you are a follower of Morales and Katcher and a believer in their pocket pivots and Bible gap ups, this does a really nice job of not only identifying the pocket pivots and Bible gap ups, but also then tracking them, how many days since, when's the last signal, and then also gives you information in regards to the 7-day rule. And these are all things that you'll learn. Now, if you haven't read these guys, you're missing out. I mean, I assume everybody's read How to Make Money in Stocks by William O'Neill. These used to be money managers for William O'Neill, and they take some of the basic O'Neill principles, and I once said with plus speed, and they do. I mean, it's just incredible what they come up with. So you could see these are the different holdings or different stocks that had pocket pivots on Friday. And you could see there are quite a few pocket pivots on Friday, 369. Some of these like Yelp and Zynga we may look at later. Days since, you can look at other stocks and see how long since their last pocket pivot. You also can scan, automated here, for Bible gap ups. And you could see that there were 77 Bible gap ups. Now, a lot of these are in the ultra-short ETFs. The TZA is there, for example. I think TECS is an ultra-short, SKF, DXD. So lots of these things here, but lots of them in short instruments. So that's EdgeRater, one of my favorite programs as well. So I'm going to go into HGSI now, 9:49. I got about 15 minutes left to go. And what I like to do is I like to go into my warehouse view. I'm going to probably resize everything because I brought things over from a different machine today. No biggie. I like to go into my top-down analysis, which is balanced, which is all technical, but it's, although weighted to the last week, does look at 2 or 3 weeks of price and volume as well. And I'm going to go into major market index pluses. I'm going to set the raw combo, and this is going to show me where the strength and weakness of the market's been over this period of time. So I can look at this many different ways, from a combo rank, which is, again, in this case, looking at price change 1 day, which got the highest weighting, 5 days got the lowest weighting, force 13 and 2, so going out 3 weeks of trading, equal weighted, and then accumulation distribution. So it's all price and volume related. So bonds up, no, not a big surprise. Dollar up, interest rates down, bonds up in price. Utilities up, As I said, dollar up. Interestingly, gold, which is probably more of a bounce, maybe it'll be a move, but it bouncing despite strength in the dollar over this period of time. Gasoline, NASDAQ, NYSE, Russell 2000, small cap 600, which have been leaders, were weak. If we look at one-day performance, strength was in bonds, gold, silver, weakness, one-day gasoline, commodities, dollar in the middle. If we look over the 5 days, strength was in volatility, the bonds, utilities, weakness in gasoline, oil, commodities, silver, and small stocks. So you probably know this from your own portfolio. I like to look at a number of charts, so let's start with the NYSE, which is one of the broad-based 4,500 or so different stocks, all different sizes and varieties, multiple different industries. And, whoops, don't want to do that. What do we see here? We see let me just quickly, for those that have not been here before, these are momentum bars. Green is good, red is bad. The top one is the bongo, and the bongo is a momentum indicator based upon Wilder RSIs and price. What I like to see are pullbacks. I like to see the long one green, short one go red, and that gets me interested in purchasing. Elder long and short, same pattern, looking for long green with short reds, which will be pullbacks, which is when I might be interested in purchasing an instrument. High jump is our vehicle for measuring how extended a stock or industry is. When it gets the highest of the high, it typically pulls back, as we can see here. And again, up here it went sideways as it got up near the top. Viable gap ups are the windows, don't show anything here. And these are DMI crossovers. Pink is pocket pivot down, blue is pocket pivot up. Candlesticks, 8-day exponential, 17, 50, and 200 simple. This column line here, these are both volume. There's nothing secret there. I put the volume twice in case I can't see it behind the bar. On the top one, these are Eurekas in green and Phoenixes in red. Those measure exuberance in the market as a whole. They give me an idea of the market. They are calculated only on the NYSE. So if they're there, it's only based on the NYSE. These are kahunas, big and up and red down. These are momentum indicators within a stock or an indice. So NYSE pulled back to the 50 again. It held, although it traded intraday below the 50. It did close above the 50. This is probably an important line in the sand that's been above the 50 for the entire 4.5 months of this advance. And a breakdown below the 50 will need to prove itself for me to be bullish. So right now, pull back, pocket pivot down, although it did close near the high of the day. Decent but not incredible volume, although enough volume to trigger a pocket pivot. Let's take a look at the S&P 500. So big stocks have been outperforming, so we'll probably see that. All right, I know this is in front of my face. Make sure I'm not killing something with my filter. It's kind of funny when you're sitting in my shoes. Sometimes it's right in front of your face and you don't see it. There it is. So kind of similar to the NYSE in that it closed at the high of its range, sort of a hammer formation there. Kahuna down on the S&P 500. Big movement day, but closed very narrow. You know, is this in a good position to bounce? That's the kind of candle you might see. From intraday high to intraday low, you only had a 2% correction, so as much as it hurt, it hasn't been much of a correction. And you know, the problem with this market and why it needs to probably pause to refresh or correct is here's another 3%. Is you start looking at these corrections that we've had, and here's 3.3%. This was the last big correction before this market rally came in, which was 8.7%. And since that rally, even to the close after a negative week, We were up 16% in 94 trading days. So we've had a big run. We haven't had much of a correction. And frankly, not that I'm surprised, S&P 500 still looks pretty strong. It looks like a small correction. We'll see what this week brings. The Dow, more big stocks. Probably looks like the S&P 500. It does. It really went sideways for the week. So its weekly move was probably down just a teeny. Let's see. The Dow on the weekly move was down 0.09%. So really almost no change on the Dow, and you could tell the large stocks certainly held up nicer than the small stocks. So take a look at the NASDAQ. Again, like the NYSE, barely closing above the 50-day moving average. It'll be interesting to see if that holds. This would be a natural place to bounce if we're going to bounce. If not, a visit down. So we've had a correction now here of 3%. A visit to the 200-day moving average would only be a 6% correction. So it wouldn't shock me to see us get down to the S&P, down to the 200-day moving average on the NASDAQ, but it would be painful for those that are HGSI investors that are still predominantly long. This is an important line in the sand in my book, and we'll see whether or not it holds as the week goes by. And then the Russell 2000, no surprises, should probably be weak. And it is closing a little bit below the 50-day moving average and probably being the weakest looking of the indices that we've seen. And it's now come down at its low of the day, about 4.5%. So weakness in the small stocks more than the big stocks. You already knew that. I haven't told you anything that you didn't know yet. I'll work on it, see if I can come up with something good for you. And kind of near an important line in the sand if we're going to bounce. Look at some other things that have something to do with the market. The dollar, as I've talked about in the past, high dollar, low market. Dollar's coming down. It too had a hammer on Friday. So from the open to the low on Friday, it only dropped about 1%. So not a big movement in the dollar for the week, but back still above the 200-day and 50. This was resistance several times. Be interesting to see if it comes down here and bounces. Mentioned gold had some strength in the week related to probably a bounce. And you had a pocket pivot down, kahuna on Friday, volume coming in, nice bullish candlestick, still way oversold. And one, I will not believe in gold until it can break above this 50 and ultimately above the 200-day moving average to resume its uptrend. Silver, which because of its industrial uses sometimes works a little different than gold, but pretty much looks the same with some bingos coming in, which is consistent with trashing of a stock. And if we see a kahunas and some eurekas coming in silver, we might be interested in that. And lastly, the VIX ran right up to the 200-day moving average and failed and came back down to where not much different where the week started. So the VIX showing nothing. And then lastly, looking at oil, sold off last week with concerns of the weakening economy and now below the 200-day moving average. So here's my take on the market. So let me just summarize it by saying to me, we're at kind of an important line in the sand. We're about at the 50-day moving average on many of our indexes, and that based upon history, from my experience, if we can hold there, we might and bounce. It would be great. If not, we may have another 5% to drop, especially down to that 200-day moving average, give or take. Now, at the recent HGSI meeting, we created an index called the Germ Index, and this index was made up of leaders at the time, many of which have already started to break down. And the reason we do this index is because of the knowledge that leading stocks often are the first stocks to break, and that it might give us an early warning signal of when the market's ready to roll. And you could see this was a beautiful index riding right up the 17-day from middle of November, and it broke below the 17 this week. It did not get down to the 50. It had a doji on Thursday, opened below and closed right at the close on the Doji Friday. DMI crossed negative, which is concerning, but it's really, they're overlapped right now. Again, another line in the sand for me. I started lightening up as it got close to that 17-day. It started to take short positions. If it doesn't get above the 17-day on Monday or Tuesday, that'll be more evidence for me that this market is going to continue down. So I'm going to look top down now at sectors, but you can probably tell that I'm a little bit worried, I guess is a fair word, about the status of the market. So to do my sector analysis, I go back into Woodward and Brown user groups. I go into group number 5, which is industry groups. I point out there's 146 of them, but I don't really want something that looked at 3 weeks of movement. I want 2 or 3 days of movement. So I'm going to go into my force up. So that 146, there were only 37 groups that were positive by force on Friday. So we're going to go through many of these today. And that means there were probably a lot that were down. And this number's been small in the past, only 23. So I guess most groups are sort of kind of like the S&P did, not a big change, and waiting to see what's going to happen. So let's see where the strength is. Now, force, you all know this already, so this is remedial, equals volume today times close today minus close yesterday. It's plotted, and then it takes a 2-day and a 13-day force. John Sarkett sort of paraphrased the rules. These are from Alexander Elder, the force index. These are Sarkett's trading rules. It's a really short-term movement, which is why I like it. So price and volume, the diversified financial services have a huge volume. Now, these had sold off of late related to the Cyprus banking crisis and other things. JP Morgan, Jamie Dimon certainly under pressure in the late press. And let's just take a look at a couple of these. So certainly rolled over. At this point, stick this over here in the corner. I'm going to change one thing. I'm going to bring in earnings on top. So makes money, but slowing down earnings per share rate. JP Morgan is corrected now about 8.6% from the top, 17 crossing below the 50, 8 has already crossed below the 17 and the 50. That's bothersome. But had a nice strong day on Friday with a positive day, up a little bit. Oops, here it is. Up 0.2%, about 42 cents up. So it's pulled back. Why is it on this list? It's on this list because the volume was 22 million shares. So positive price change, huge volume. It gets near the top. So it's in a pullback. I'd like to see it get above the 50 before I'm interested. I'd be worried about an ice hole failure, which is David Elliott's term for failing at the 50. Take a look at Bank of America. Bank of America pulled back, sitting right on the 50. To me, a little bit healthier looking stock and more of a position expected to bounce. It too has reducing earnings per share growth. So I'm not real excited by these, although I've heard a lot of positive things about Bank of America on the boob tube over the weekend. Computer electronics retailer is going to probably be Conn's and Best Buy. All of a sudden, Best Buy is a growth stock again. Some of it's related to potential takeovers, but a lot of it's just related to some fundamental improvement in the business. And you could see pull back to the 17, had a big day Thursday and Friday, a kahuna on Thursday, huge volume. So obviously you want to know what happened in this on Friday, so I go to more info from the web, and I go down to FinViz, and on FinViz it tells me that they opened up, that's Friday, Thursday. So Best Buy and Samsung have announced a strategic alliance to combat Apple, essentially. And that brought a lot of interest in the stock. Talk about a stock that changed its spots, going from a very bearish story, as you can see in the last year, just a steady down, to a bounce at the beginning of this year and a over 100% move in one of the Wall Street darlings right now. A little bit more persistent performer has been Cons. Cons is an interesting play to me because Cons has a lot of what Best Buy has, but to deal with the Amazon being the showroom from Amazon, which has been one of the things that has most likely hurt Best Buy, and I have to admit that it's very tempting to go in to Best Buy, find what you want, and then go buy it cheaper at Amazon, which is why one of the reasons the stock is up is they match prices. Con has gone into the mattresses and other home furnishings in addition to the electronics, and the nice thing about that is most people don't buy their mattress from Amazon.com. So Con had a number of Bible gap ups this week. Everything is green, had kahunas. Had sort of a small inside day on Friday. Obviously a very bullish move. Nice earnings per share growth. Trades at a multiple of 26. Doesn't pay a dividend. I like the stock a lot. I liked it more when it was closer to the 50. It's starting to get a little bit extended. I might give it a chance to let the moving averages catch up. But those Bible gap ups are interesting, 2 in a row, and huge volume with the kahunas. So there's a couple of stocks if you want to go long. Internet retailers. Yelp. Oh, good. I like a couple of these. Let's take a look at these. Facebook. Looks like it's starting another leg up. It'd be nice to see a break above the 50, but a couple of pocket pivots came in this week. DMI crossover. It's at the top of its high jump, but it's still a young stock, so I'm not too worried about that. In fact, it's underneath the 50, so I would ignore that. That's a calculation error. You can see the strength of the group is here. Volume is about average volume, higher volume on Thursday. So it came down to its 200-day moving average. First time you really had one since it's a relatively new issue. Moving up, if it gets above the 50, I might be impressed with Facebook. Yelp had a big move this week. Pulled back to its 50. Had a DMI cross, everything's green, near the high from top, big kahuna on Friday. I believe they had some good news, some more info from the web. We'll go on to FinViz. So nice how not only is this in the program, but it basically just drops you right into the right place. And I can't imagine, I guess, did it pop because Google spun out Frommer's back to the brand? Not sure why this moved up. Couple of buy weeks this week, hedge funds buying it. Do your own research. I don't like stocks that don't make money. I like this pattern. Pull back to the 50, moved up, got above the 17 with a big kahuna. Orbitz is a cheap stock. Nice earnings per share coming into the stock. Pull back to the 17, had a Bible gap up on Thursday. Big volume Thursday and Friday at kahuna. Probably not too late to buy. In fact, I'm going to go into MarketSmith, which most of you know I like to use that as my secondary source of fundamentals. I get a lot of questions about, do I need HGSI if I have MarketSmith? You see which program I'm using? The answer to me is a strong yes, mostly because of all the other things that I do with the sector rotation and charting that I can't do in MarketSmith. So I'm going to look at Orbitz worldwide, some fundamentals in a second. OWW. Let me close off this one. Good. I remember I looked at it this weekend and it made my personal buy list, so let's see if I remember why. You could see it's got earnings. It's a turnaround play. All of a sudden it's got earnings coming into the stock. Small stock, so beware about that, but it does have decent average volume of 1.7 or 533,000 shares, more volume on Friday. Certainly not price climb by any means, but is a turnaround play making money and looks like a decent value. Expedia much less exciting. Now we're getting into where there was a lot of interest. The gas plays seem to have turned around. So on the gas plays, Cabot Oil and Gas is one that I'm an owner of through third parties that manage some of my money. So I was happy to see this. It had pulled back Friday. It had a Pocket Pivot, Kahuna, DMI Cross, pretty much all green, makes money. You know, the gas plays certainly seem to be in play right now. I showed you earlier, I don't know if I pointed out a Bible gap up on UNG. So natural gas plays performed well for the week, and you can see here a whole list of them that you may be interested in, that you may own. And a lot of these have been in some pretty substantial pullbacks. Ultra Petroleum had been a darling in the past, have pulled back. Big day on Friday, Kahuna Pocket Pivot has to get above its 200-day moving average, at which point I might be compelled to look at this a little bit more. So these stocks were definitely moving. I'm not going to spend too much. There's a lot of choices in here. Range Resources, again, pulled back to the 50. Nice move up on a big Kahuna on Friday. So a lot of strength in the gas patch and the exploration, Cabot probably being the strongest. If gas is up, it's not surprising that coal is up. And you know, it's hard to get excited by any of these stocks, to be honest. They all have gone through a relatively challenging period of time. As you can see, they're all in downtrends. Hard for me to get excited until these break above their downtrend or the 200-day moving average. That's Arch Coal, Peabody, Alpha Natural Resources. Now, mind you, last week the best acting group was bottom fishing. These are bottom fishing stocks. Consolidated Energy above the 200-day, but this is just choppy. Hard for me to make much of this. So gas pulling coal. I think gas is pulling up our drillers. And you know, one of my worst buys of all time, or I should say worst managed stock, was P10, and it's actually getting to the point where it's positive for me, which is kind of blows my mind. Several of these look good. Look at the top three. Now, if you look at their fundamentals, their earnings growth has slowed considerably. If you look at their patterns, you've got a pullback here to the 200-day, Pocket Pivot, Kahuna, big volume. This is on Neighbors, probably not my favorite chart. Noble Energy looks just like Neighbors, has positive earnings per share growth coming in. Again, DMI Cross, everything green, Pocket Pivot, bullish candlestick, and a Kahuna. So something is going on in this group. And here's P10, the one that I wrote down, and I'm not having a nice ride up. Now, this isn't an account that I hate to say ignore. I don't ignore it. It's a smaller account, and it's not always number one on my mind, which is really a stupid thing to say because it's money's money. But during the crash, this is a stock that dropped from the 30s down to 15. And the interesting thing is it was dropping. Its fundamentals were strong, and that's back in a different era of my trading life. And I didn't want to believe that the stock was tanking, and it just kept tanking. The nice thing is the fundamentals have weakened now. You can see how strong they were back in 11. They've weakened, still makes money. It's in an uptrend. It pulled back to the 50, a Kahuna. I like this one the most because it's pointing upwards in an uptrend. Gas is strong. These guys are going to come with it. Utilities, not a big utility fan. Department stores, let's see what's Dillard's, who was interestingly, J.C. Penney's. Back from the dead. I mean, this is probably the least liked CEO on Wall Street if you listen to CNBC, which I, of course, make the mistake of doing on a regular basis. Trying hard to turn this around. Had a couple of pocket pivots, a DMI cross, a big Kahuna, volume coming in. Doesn't make money in a downtrend. Looks nice, but let it get above the 200 before you believe it. Macy's. Now, this is a much more powerful chart. Would have been nice to have got interested down here on the pullback. Kind of extended. Couple of Kahunas, that's interesting. Pocket pivot on Thursday. Makes money with some growth. I like Macy's if you want to be in retail. That looks interesting. You can tell there's not as many great stocks this week. We're going a lot faster than we normally go. Aerospace and defense. Boeing, maybe some really good news here this week as it they have a fix for its leaky batteries. It's funny, it's hard to look at this and believe that they've had trouble. So it's certainly extended, had pulled back a little bit, a pocket pivot, bullish candlestick, volume, mostly green above, makes money with growth rate, pays a 2.3% dividend, has a PE of 17.2, and a growth rate that's above it. For a blue chipper, that's pretty impressive. If they can fix their battery problem, this might be a stock to look at. I don't think any of these really made my day. Kind of choppy here on General Dynamic. Northrop Grumman's had a nice big move up here with multiple pocket pivots. Everything is green, slowing earnings per share growth. Trades at a multiple of 10, pays a dividend of 3.1. Cheap on the multiple perspective. Don't know much about this. Not a bad pattern, starting to get extended. This is what I do. I go through the top list. I go through some of my favorites. Movies and entertainment, lots to like in this group. Don't totally get what's going here. And probably one of my favorite stocks, which had a light pullback and is running again, is Lionsgate Entertainment. We've been talking about this on these calls for months. Beautiful fundamentals from a growth perspective. In fact, if I go into MarketSmith, which is really what I like to look at for longer fundamentals, LGF. $1.40 next year, 50% growth. Trades at about $24. Volume of 1.4 million per share. I like this one a lot. It's had a nice run. It's high on the high jump because of its extension from the 200-day. But it pulled back, had a pocket pivot, bullish engulfing pattern, DMI change, Kahuna turning mostly green, great earnings per share growth. One of my favorites that I found this weekend. And then let's go look at some biotech and see what else that I might want to make some comments on. Broadcasters like movies and entertainment had a good week. REITs have done great. I just don't know how to buy REITs. Take a look at biotech here, change the index group. All right, so I have no idea what Sarepta does. It doesn't make money, which means it's a pre-clinical stage company. They had some buy ratings and a price targets of 65 coming in. As you know, it's in a lower left to upper right. This here is about 10, and it's at 36 now, so that's a big move, although it doesn't look like that. It had some good scientific news come up here. Sold back to the 50, looks like it wants to run again, pocket pivot on Friday. Again, preclinical company, doesn't make money. Medivation had some upgrades come this weekend. They have a new prostate cancer drug on the market that's doing well. You know, it's maybe time to get interested again as it breaks above the 200, but I think there are better looking charts. Onyx, they've got 4 oncology products on the market. See, 1, X-Virus 2, Regos 3. 3 oncology products on the market, a 4th one in development. They own the rights to one fully, and they partner with Bayer on a couple of others. This has been a great performer over the last couple of years. Pulled back, had a pocket pivot, a big kahuna, everything is green. I think it wants to run again. It's had a number of buy ratings, about 105. Alexion, I don't want to call it a has-been, but I'm not as excited about it now. Regeneron was one of my picks last week off the 50. It had a nice bounce. It's got great earnings per share growth coming into the stock. Its multiple is 47, which is high for a pharma, but it's got the earnings to support it. Everything turned green. I'm sure a lot of you have this as a long-term holding. We've been talking about it for quite some time. It's an expensive stock, still a winner and a leader. I'd rather buy it when it gives a pullback if it's up to me. Carix, don't know. They had a positive data back here. It made my interest because a couple of kahunas. It's gone based now for 2 months. Had a nice looking day on Friday, up 3%. Group rank is high. It's kind of like the first one. It's preclinical. It might be worth nibbling. You may have seen when I opened it up that I had under a sell list a stock called Nectar. This is one of my favorite stocks, but I bought it when it was $4, and I'm just wondering when to get off. And it's a lot like Carix. Whoops. When I say it's a lot like Carix, it's one that doesn't make money. And You can see it's had just a huge run here. Doji here, if it opens up on Monday, I'll keep it. If it opens up down, I'll take my profits and be happy. I've got over 100% on this one. All right. Those are the ups. Just see if there's anything else here that I'm interested in. Got about 10 more minutes. Yeah, let me talk about these guys. These guys sold off hard, refiners. And then they started, the last 2 days, they looked okay. The earnings per share growth, which has driven these guys, in which we've talked about before, being very bouncy, is starting to bounce down. So here's Valero. Let me just pull up and show what I'm talking about. They had big 2.9 to 10 to 11 to 12 growth. Growth is clearly slowing. Multiples are teeny-weeny. Stocks have pulled back. Some pay a dividend. Some do not pay a dividend. 1.9%. Their momentum indicators have gone red. It's hard for me to get excited. I did bottom fish and nibble on this guy here, and I'll have a very short leash on it. This is Northern Tier Energy. It looks like all the others. The reason why they sold off was some potential legislation talked about that's going to reduce sulfur content in their distillate products, and that's going to increase their cost, but that also increased my cost as a consumer. Now, why did I buy this one? Same pattern as the rest. 19% dividend. You know, it's I don't know. It's kind of a huge dividend. It's a refiner. It had behaved just like the other refiners. It's like the other refiners. It's turned red here. I'm going to have a short leash. It makes money, but like the other refiners, it's slowing down. Let's just take a look at MTI. I mean, obviously, you want to make sure it can support its dividend. And you can see it's got growth in 13th and starts to flatten out. So I'll have a relatively short fuse on this guy, but I'm suckered in by its dividend. Talked about it before. I've mentioned it in the past. All right, enough on the longs, backwards. So let me just see if there's anything else here. I'll look at some builders at the end. The home builders are here, so home builders made the list. Apparel retail made the list. What made the negative list? Semiconductors continue to be weak. None of these made my buy watch, which is not surprising because they're weak. But here's one, Texas Instruments, that has pulled back on its 50, pocket pivot down. A break here might take it down to its 200, or it will bounce up. We'll see what happens. Computer storage peripherals. Seagate and Western Digital's, their fundamentals have deteriorated, but their stock patterns and technicals have not. And you could see it's still in an uptrend. Here's just pulled back to the 17-day, but it was down 2.3%. I said their fundamentals have deteriorated. You can see their earnings per share rates are becoming still positive, but their growth has slowed or stopped. Auto manufacturers, investment bankers, all to the downside. All right, so we've now looked at a lot of different, we looked at a market, we looked at some industries and sectors. Let's look at a couple of shortcuts and then we'll say goodnight. So one of the things that I like to do, which I've done several times before, is I like to take several of my favorite groups, do something called group inclusion reports. So I'm going to show you what it looks like very quickly. If the best stocks are in the best groups, then if that stock's in lots of groups, it must be a really good stock. So I'm going to look at pocket pivots. I'm going to look at Bible gap ups. So I'm picking my favorite groups here. I'm going to go into Woodward and Brown, and I'm going to pick best criteria, ERG 240, growth, HGS 100 leaders, quarterly EPS, Stocks groups move to upside, strong EPS. I'm going to make a group from lists, and we're going to call it AAA Morning Web Gems. I want to know which 8 stocks make the most of those lists. I'm going to hit OK. So the issue here is if these are great lists, then if I'm on a lot of those lists as a stock, then I'm probably a good stock. So let's see what stocks are on the majority of the lists. All right, so several of my favorites that we've looked at. We'll look at each of the top 10 real quickly. Many of these were on previous weeks. Some of them we've looked at already this week. So you saw how quick that was. I generated a list. So let's go into the program and find my morning web gems. Here they are. These are my top 8 or 9, and let's put them into a warehouse group, rank them by top to bottom. And let's take a quick look at these. And a lot of these are in the same groups that we've looked at already. So Lannett is a pharmaceutical company. Don't know them from Adam. It makes money, but not much in the way of earnings per share growth. It's had a beautiful move up, going sideways here, looking for a catalyst to go up again, but it's certainly been a leader. Pausing to refresh, setting up for a potential buy. Medical Properties Trust is just a beautiful REIT. Again, I don't know how to buy REITs, so I don't talk about them. Multiple of 18, pays a 4.8% dividend. Historically, owning medical buildings has been a great investment because doctors don't go out of business. You see the railroad tracks, 8, 17, 50, 200 lining up nicely. What a powerful run. High jump, yes. Repligen is a small biotech, small revenue, no earnings. I don't think they have a, not sure that what they have on the market. Looks like it's having something going on, 2 huge volume days, actually 4 huge volume days after a kahuna, a couple of Bible gap ups. You know, when a leopard changes its spots, I get interested in, you know, I don't want to pick on Repligen sounding like a leopard. But it's changed its spots. All right, RGEN, REGN. Nope. All right, if all else fails, go back and look. It's sort of like driving. I don't want to ask directions. It is RGEN. Then you could see breaking out here. It's going to have some earnings coming into the stock. You know, it makes money. It's probably a nice product, a nice opportunity for an inexpensive biotech that's turning profitable. I like it. I'm just going to put this one on my buy lists. All right, what else was on the list? Sinclair Broadcast is another strong broadcaster. Earnings per share rate is slowing. I like, as I mentioned, broadcasters and some of the entertainment companies doing well. Beautiful pattern there. You know, think about some of the other things we saw below the 200-day moving average. What a beautiful move here. Here's Regeneron. We've seen this one before. Here's Lionsgate. We've seen this one before. Celgene is one of my favorite biotechs at the moment. So if we call this first stage, although it's already had a big move, but there's clearly a basing. Second. Third stage breakout coming. It's probably later than that, and I'm probably dreaming when I say only third stage, but all green, pocket pivot on Friday. It had some recent upgrades to about $135 targets. Every time it gets upgraded, it runs. Still love Celgene. Cons we talked about. So that's one way. And now lastly, so that's that. Other things that I like to do is I like to go into all securities and then look at some of my favorite views, and one of my favorite views is called Sprinters. So since you don't have my setup, you go in here and you'll look under HGSI Strategies, Woodward and Brown, Reference Library, Miscellaneous, that's not how you sell it, say it, Sprinters, and you get a list of very strong stocks. It looks like there's 32 of them here. Several of these we've looked at already, but it's a shortcut to find things. So a couple of shortcuts, that group inclusion filter and the Sprinters, are other ways of finding things. Sometimes I go into all securities and I just go into scorecard, which is a balanced technical and fundamental. And it's ranking stocks on best fundies and technicals. And look how many of these we've seen already. Regeneron, Celgene, Hertz, we looked at last week. It pulled back. I think it's still a great buy. Avis isn't so bad either. You see a pullback to the 17-day and a very ferocious uptrend with great earnings per share growth, a leading stock. So here's another quick way of finding a lot of the same stocks. Lastly, let me just take a look at the stocks that I found that I thought were compelling for this week that I'll be watching if the market goes up. Let me say that again. I will be watching these stocks if the market goes up. Eagle Material is a home building company. Excuse me, it's not a home building company, it's a cement company and other products for home building. Pulled back hard, got back above the 50 with a pocket pivot and a big kahuna on Friday, great earnings per share growth. I love this stock. I've been in and out of it. I'll probably, if it stays above the 50, will be interested in getting back in. We look, Nexstar is our broadcasting company, a nice looking chart. I'll show you that one. Lower left, upper right here, pullback, big kahuna volume on Friday, sort of a I don't even know if that's called a bell toll, but at least a bullish engulfing pattern. Good earnings per share growth, trades at a multiple of 20, growing at 40 to 60 times, like Sinclair, Nexstar a lot. Cabot, we looked at already. Orbitz, we looked at already. Haynes Brand, boring company, not a boring looking stock. Look at this earnings per share growth coming into the stock. Trades at a multiple of 18, does not pay a dividend. ROE at 34.72. ROE to PE of 1.9, a very attractive looking stock. Looks like it's starting a nice leg up. Noble Corporation is one of those drillers we looked at. Louisiana Pacific Corp. This, and I guess LL, Lumber Liquidators, probably run together. They both pulled back. Great earnings per share growth, but slowing down in the out years. They provide lumber to the housing industry. They too, like Eagle, pulled back, had a big pocket pivot on Friday, multiple kahunas, big volume, great earnings per share growth, certainly interested in that one. Tractor Supply, a retailer, it's gone sideways, big kahunas up, DMI cross, kahunas like this one as well. Fred Richards is one of the gurus that we follow at HGSI. If you haven't heard him talk, you really missed out, but this is one of his big holdings. The gap from a retail perspective, a little bit of a shallow saucer here, makes money. Of all the retail stocks, apparel stocks, this is the one that I like the most. There's probably better ones out there. We looked at Carrick's already. Stewart Information Services, they do housing titles. I guess if housing continues to run, they'll have an opportunity. They're in the midst of a pretty substantial pullback. They had a pocket pivot getting above the 50 on Friday with a DMI cross. U.S. Silica is another stock, I believe, involved in the building industry. Metals and mining, my bad. Oil, glass, chemicals, building products, so there is an overlap in the building industry. Like Eagle, like U.S. Gypsum, frankly, like Louisiana Pacific, a pretty robust pullback down to the 50 with a pocket pivot, DMI cross, good volume. Flagstar Bancorp, this is a deep pullback in a regional bank. This was a darling on the way up. It looks like a nice bouncing position. If it can get above that 50, had a big kahuna, DMI cross, tons of volume coming in, makes money on the banking side. Santeris is a small drug company with a couple of products, pulled back. I'd wait to see a signal come in like a kahuna or a pocket pivot or a Bible gap up, but I think this guy's going to resume its uptrend. don't know when. I mentioned U.S. Gypsum, put this in the same category as Eagle, LPX. Pull back down to the 200, big kahuna on Friday, big powerful move up. Like to see it get above the 50 and hold. It might be one to watch. Home builders, a couple that I like. KB Homes has got great earnings per share growth because it's a turnaround play. Seems to be a good place to buy when it gets close to the 50 as it is right now. Nautilus Group, if you want to put that gym equipment in your house. Love the fundies. There's something I liked about this stock. Let me go in here because I just don't see it. I always forget to look at what the ticker is. I've already gone overtime, so I'm almost done, I promise. Somebody complained last time because I didn't show my buy list, so I just wanted to show you today each one of the stocks that I thought was interesting as I did my weekend review. So it's growing 30 times, 60. The stock trades at $7. Look at the earnings per share. If it makes its numbers, it's a $12 stock, which is a pretty big move from here. Nautilus equipment, bikes, lots of leisure equipments. It's had a nice move, basing. Again, this goes into what I call pullback, waiting for a signal. It's pulling back, but I don't know when it's going to stop pulling back. So I'm going to look for a pocket pivot. I'm going to look for a kahuna. I'm going to look for a Bible gap up. I'm going to look for a candlestick that's interesting. I'm not going to buy it until it tells me that it's going to stop falling. That's when I think goes up from here. Ryland's another housing stock with good earnings per share growth, sitting on the 50. Dunkin' brand, we all know what Dunkin' Donuts are. I love a stock that goes sideways to the 50-day moving average. You've got a squeeze here, the 8, the 17, the 50. You've had 3 kahunas in 5 days, 4 days. Pocket pivots, everything green. This stock is going up. Just a beautiful pattern. Love this pattern. Bank of America we looked at before, looking for a reason to come in. A lot of truckers made it. Now Hertz and Avis count as well. Old Dominion, another one that was in there. I picked Ryder because I like the pattern of a pullback. So this is what I look for. Pullback to that 50 and a pocket pivot. This opens up on Monday and the market is strong. This is the kind of stock I like to consider. It's got earnings per share growth, pays a 2% dividend, trades at a multiple of 14, which is less than its earnings per share growth. Mattress Firm Holdings, this is in the setting of a fairly robust pullback. I like this earnings per share growth. Doesn't seem as exciting right now. And then here's another, again, this is what I look for. This is a gas play, I believe, Energy Partners Limited, oil gas exploration, in a fairly robust pullback down to the 50. It had a DMI cross, big kahuna, big positive candlestick, great earnings per share growth, probably a low-risk buy. You set your stop right below the low of Friday. BE Aerospace, another one pulling back. I expect to see a signal come in here with a pocket pivot, kahuna, Bible gap up, etc., DMI cross. If Boeing gets its release, it'll probably bring the whole group of companies that support it up, and this is one of them. Lithium Motors pulling back to the 50. Again, I need to see a signal to buy here, but I like this company. They're one of the automobile dealers. Buying at the 50 has been a good thing over the last year. I just need to see an evidence of why. I need to see that kahuna coming in. I need to see a pocket pivot coming in, something that tells me it's time to buy. Masco, again, same pattern. You know, I wouldn't touch this stock until it gets above the 50 and gives me a reason. Kahunas, pocket pivots, etc. But it's setting up where, and it's come down to the 50 in the past, it's actually bounced from there. GenCorp, this one intrigued me on a couple of ways. A nice run up here, GY. Let's see if I can remember why it intrigued me. Oh yeah, this is why. I'm an earnings hound. Projecting $1 earnings in 2014. Stock trades at under $14. Defense industry in a nice uptrend, but can still go higher. This is the kind of stock that I'd be buying soon. Just get above the close or the high of the day on Friday. Probably the only thing I was looking for on that one. Perion, they make Incredimail, a new app. Don't know how they make money, an Israeli technology company. Pullback, sitting on the 50-day moving average. Pullback, waiting for a signal, meaning Let's give me a signal of the pocket pivot, Kahuna, et cetera. Great earnings per share growth. Investors Real Estate Trust, I picked this one because of a 5.4% dividend in the lower left, upper right. Great growth rates compared to its PE, but I don't know if those growth rates come before or after you pay the dividend. Headwaters is an old name. They make products for a lot of industries, coal, utilities. I like the chart pattern with a pullback to that 50. It's a turnaround play where it's stubbed its toes on earnings. Looks like it's going to make some earnings again. I'm going to watch this one. It's not one to run out and buy. Jazz is a pharmaceutical company with great earnings per share growth, trades at a low multiple of 12. I don't think it's well understood. They do have predominant in one product, which always has generic risk, but it's pulling back. If I can buy this one close to that 200 on a bounce day, I'll be a happy camper, so it's one I'm just going to watch. Meritage, another home builder with good growth, sitting on the 50-day moving average. Bonanza Creek Energy, I like it because it's down to the 50. I liked its earnings per share growth, BCEI. You can see how much earnings per share are coming in. That's a lot of earnings per share. It's the kind of stock that gets bought out if that's real. So one that give me a positive signal I might be willing to get back into or into. BAK is a Brazilian specialty chemical company, if I remember correctly. Why do I like this? BAK. It's a cheap stock. I don't like it that much, but I like its earnings. Unpredictable. Big earnings per share turnaround. Basing for quite some time seems like a low-risk entry to me. Again, I'd like to see a reason. I probably got it here. DMI cross, everything's turning green. Big Kahuna if it opens up on Monday. I'd be interested. This line here tells me the group is weak. I take notice of that. And that is my list of stocks that I thought were interesting. So once again, just because I showed you stocks that I like doesn't mean I'm going to buy them on Monday. What we've done is we've looked, as promised, as sort of the top-down review. I looked at the smart groups for what I made the GIF from. Didn't spend much time on these because I ran out of time as usual. Hope you all got something out of this. I'm looking for a bounce this week, but just because I'm looking for it doesn't mean it's got to happen. If I get a bounce, I'm going to look at some of those strong stocks I showed you at the end, but I don't buy them just because they've been strong. I need to see a signal, which is my trigger. You all have a great week. Thank you for listening. See you next week. And this is Jeffrey saying, have a great week and a good Sunday. Thanks. Bye-bye.